Today I'm excited to continue the Creating the Best Strategy series, in which I test dozens of indicators for different purposes like entry, exit signal, momentum filter, trend filter, and so on. If you haven't seen the previous parts yet, check out the full series by clicking on the pop-up in the top right corner or find the link down in the description. In this part we will dive into the question, which is the best fixed stop loss indicator? ATR based, swing low, swing high based, or maybe percentage based? I will go over the main stop loss types, the indicators I will use, the backtesting method, the sorting and ranking system, and finally I will reveal which is the best stop loss method to use. A quick note, if you are new to algorithmic trading, basic statistics and backtesting, this video might be a bit complex. However, I explain everything as simple as possible, so take your time. If you are new here, make sure to subscribe, turn on the notification bell if you don't want to miss content like this. Also comment down below if you know any other stop loss methods or indicators that I should test, and without wasting any time, let's get right into it. First of all, let's briefly talk about stop losses. Using a stop loss in trading is necessary as it protects you from losing large amounts of money. Generally, there are two types of stop losses: fixed and trailing. A fixed stop loss will be set right at the trade entry to a fixed level and it will stay there throughout the trade. A trailing stop loss, on the other hand, is a more advanced stop loss method. It means that after opening the trade, you will continuously update your stop loss as price moves into your favor. Generally, a trailing stop loss will move higher and higher in case of a long position or lower and lower in case of a short position. This type of stop loss is better in my opinion, as if the price of an asset moves significantly in your favor, the stop loss will move accordingly and will protect your current gains in case the price reverses back. But take a look on these two examples. These are the same trades, but the first one uses a fixed stop loss and the second one a trailing stop loss. While the price in the beginning was heading towards the take profit level, it reversed right before hitting the take profit, and eventually that led to a stop out. On the other hand, on the second example, we used the super trend as a trailing stop loss. Each time the super trend moved to a higher level, we updated the stop loss accordingly. And that leads to another stop out, but at a higher level when the trade was already in a profit. Well, that's the main difference between these two types of stop losses. In this part I will be focusing only on the fixed stop loss methods, but don't worry, in an upcoming part 2 I will research and test the trailing stop loss methods too. Now let me explain how I will find out which is the best fixed stop loss indicator. To find out which is the best one, I coded 8 pinescript strategies for 8 stop loss methods. Each script will use the same entry signal, the squeeze momentum, and the same exit signal, a simple risk-to-reward ratio. The squeeze momentum is a mid-tier entry signal indicator. It is not the best one and not the worst, so I thought it will be ideal for this backtest. I will test all the 8 stop losses. Whichever stop loss generates the best backtest results on most of the asset and timeframe combinations will be the best stop loss indicator. Now let's go over which stop loss indicators I tested and how I used them. I tested 8 different fixed stop loss methods. These are the ATR bands, the pip based, the adaptive percentage based, the pivot level based, the swing low swing high based, the Donchian channel based, the Bollinger Bands based, and finally the moving average based. Now you can see that the Bollinger Bands based and the moving average based are partially disqualified. I will talk more about that later. Now let me explain all the stop loss indicators I will use one by one, and then I will go over the parameter settings. To demonstrate the different stop losses, I will use these two trade examples. This is a long trade example and this is a short trade example. First, let's see the ATR based stop loss. For the ATR based stop loss, I will use the NNFX ATR, this one. And I will uncheck its buy TP and sell TP levels and set the stop loss distance to a 2 level. The NNFX ATR calculates the average ATR value over the last set number of candles, in this case 50 candles, and will multiply that value with the set multiplication value to place a stop loss at that distance. So in case of this long position, we would have put the stop loss right there, and in case of this short position, we put our stop loss up here. Next, let's see the Donchian channel. The Donchian channel is a built-in indicator. For that you will need this one. It only has a length option, and the price is always inside one of the Donchian bands. The Donchian channel basically moves up if the price breaks the recent high point, and moves down if the price breaks the recent low point. To use it as a stop loss, in case of a long position, we will place the stop loss at the lower Donchian band, right here, And in case of short, we will put it at the upper Donchian band right here. This is similar like to the swing low, swing high based stop loss or to the pivot based stop loss, but works slightly different. Next, let's see the pivot based stop loss. For the pivot based stop loss, I used the pivot stop, this one, and it looks like this. It has one setting, the length setting, and it will draw lines to the recent swing highs and swing low points. If it's set to a lower value, the pivots are updated frequently, and if it's set to a higher value, the pivot points are rarely updated. For this example, let's use the default 10 value, and in that case, we would place the stop loss right here to this pivot level, and for a short, the stop loss will be right here at this red pivot level. Next, let's go over the pips based stop loss. For the pips based stop loss, go to the left hand side, click here, and choose the date and price range tool. It would work something like this. As the entry level would be here, we would place the stop loss to, for example, 3000 pips or ticks. And in case of a short position, that would be set somewhere around here. For each asset, I will test 4 different pip distances. Next, let's see the percentage based stop loss. For the percentage based stop loss, we could use a simple method just like with the pip based stop loss. For example, if I want to place the stop loss at a 3% distance, I would place it somewhere around here. But I decided to take a different approach, so I coded a simple indicator script. And that is this script. This is totally free, I will link it down in the description. This script basically checks the average percentage movements of the last X number of candles, so it will work something like the ATR distance, but the stop loss placements are slightly different. Let's add it to the chart and let me show you. This is how it looks like. I choose the calculation to be based on body plus wicks, and the lookback value will be always set to 50. And for this example, let's see what if I use a Ford multiplier example. Just like the NNFX ATR, it will draw lines above and below the price, and we will put our stop losses to those lines. In case of a long, it will be here, and in case of short, it will be up here. In the potential part 2 of this video, I can also try the strict percentage based stop loss placements without using this adaptive version. Let me know if you want to see that. Okay, now we have only 2 indicators left, and those are the ones that were partially disqualified. Let me tell you why. So the first one is a moving average based stop loss. For that I use the RMA or the SMMA, they are the same. So type in SMMA and add this one if you want to try it out. Okay, currently its length is set to 20, and in this case we would put the stop loss of the long position right around here, and the stop loss of the short position here. But let's take a look what happens if I change the length of the moving average from 20 to 60. Well, now the moving average at the long entry is above the entry level. This means that the stop loss would be placed right at this level, which technically means that the trade will get closed right after it entered. The same case with the short position. As the moving average is below the entry price, the stop loss would be placed here, which will lead to the instant close of that specific trade. So technically, the moving average based stop loss is not just a simple stop loss indicator, it also works as a trend filter for the script. This will give a huge advantage compared to all the other indicators that don't have a trend filter. And the same is the case with the Bollinger Bands based stop loss. For that, just simply type in Bollinger Bands and use the built-in one. The Bollinger Bands has 2 important parameters, its length value and its std-dev, which is technically its multiplier. Now using it with its default values, 20 length and 2 std-dev, in case of a long position we would place the stop loss at the lower Bollinger Band value here, and place the stop loss for a short position to the upper Bollinger Bands. It is all good until we keep the length values at low. But let's take a look what happens if I change its length value to a relatively high level, for example 150, and the std-dev multiplier to a low value, for example 0.3. Now in this case, we get a similar problem just like with the moving average based stop loss. As the Bollinger Bands use a moving average baseline to its calculation, now in case of the long position, the lower Bollinger Band is actually above the entry price. That means that this trade would get stopped out immediately right where it entered, and the same is the case with the short position. The upper Bollinger Band is right here below the entry price level, so the trade would get closed instantly after its entry. That means that the Bollinger Band works as a trend filter too. For this reason, in my eyes, I would disqualify these two stop loss options, but this doesn't mean that these are bad stop loss options. It just means that it's not fair to compare these two with all the other stop losses that doesn't have any trend filter in them. Okay, so those are all the indicators that we will test. Now let's go over the stop loss setups or the parameter settings I tested. For the ATR bands, I tested placing the stop loss at a 2x, 4x, 6x and 8x ATR multiplier distance, and I used a 50 ATR length in all cases. For the pip-based stop loss, I used separate values for each asset, as for different assets there are different pip distances that are optimal. For Bitcoin I will use these values, for the Euro USD these, for Microsoft these, and for the US30 index these. And here you can see all the other parameter settings. Okay, but which assets, timeframes, entry and exit conditions I tested? Let's see. I tested 4 assets: Bitcoin, Euro USD, Microsoft and US30. I tested 3 timeframes: the 50-minute, the 4-hour and the daily. I tested 2 directions, long and short, separately, and I tested 2x4 entry signal setups and 2x4 exit signal setups. Let's see a few examples. Testing all the possible combinations for the ATR bands would look something like this. 4 stop loss parameters, 4 assets, 3 timeframes, 2 trade directions, 2x4 entry setups, 2x4 exit setups, and 2 trade directions. If you multiply all of these, we get 6,144 combinations. So, as all of the 8 stop loss indicators have 4 parameter settings that I tested, the total number of combinations comes out to 8 times 6,144, or 49,152. Testing this number of combinations would take weeks to do, so I decided to take a different approach similar to the latest parts of this series. Instead, I used a random parameter testing approach, which helps find statistically significant edges without the need to test every combination. This way we are still able to identify the best performing stop loss indicators based on multiple conditions. I tested 20% of all the combinations randomly. This means that the tool I use for backtesting will change the parameter values of the strategy scripts randomly and will test altogether 9,830 combinations instead of the 49,000. Next, let's talk about the fees. For crypto and stocks, I used a 0.05% per trade and 2 tick slippage. For Forex, I used 20 ticks of slippage. And for the US30, I used 2.5 USD per contract and 30 tick slippage. There are a few other rules too. The backtesting time interval will be the last 4 years, and I also included a trade count limit. To have a statistical significance for the daily chart, the minimum trade count will be 20, for the 4-hour chart 50, and for the 15-minute chart 100. I know these values are a bit small, but if I would have used higher values, there wouldn't be any valid backtest results on the daily and mainly on the 4-hour chart. Before revealing the final results, let's go over the most important part, the sorting and ranking system. Once I got all the backtest results, I had 192 spreadsheets, so I had to sort them into different groups. For sorting, I created 24 groups. One group is for one timeframe, asset, and trade direction combination. As I tested 3 timeframes, 4 assets, and 2 trade directions, 3 times 4 times 2 comes out to 24 groups. Here you can see one group example backtest results for the BTC USDT 50-minute chart, longs only. In this group you can find all the stop loss indicator backtest results for the BTC 15-minute chart, long only direction. Now let's see the ranking system. Once I got the 24 groups, I sorted them based on a profit factor. Whichever stop loss indicator gets the highest profit factor in a specific group will get 20 points, the second best 19, and so on. But why base the ranking on profit factor and not on net profit? Each backtest result got different number of trades, meaning the script with more trades have more chances to generate more net profit. This is a clear advantage. That's where profit factor comes in. The profit factor is the gross profit divided by the gross loss, which means that the number of closed trades becomes irrelevant. Profit factor is the best way to compare backtest results with a different number of trades. I also added another column, the weighted points. This column is the multiplication of the base rank points and the profit factor. But why do we need this? Well, if we take two different groups and in one of them the best result has a 1.2 profit factor, while in the other the best result got a profit factor of 3, obviously the 3 profit factor one is better, therefore it should receive more points. And the weighted points solve this problem. Finally, I summarized the points for each stop-loss indicator. The stop-loss indicator with the most points will be the best stop-loss indicator overall. Congratulations for making this far. Now you know everything on how I test, compare and rank different indicators to find the best ones. If you want to take a closer look on all the backtest results, the sorting and ranking spreadsheets, and get access to all the 8 plus 3 scripts I used to complete this research, you can get access to these for 25 USD and support my work on our Patreon shop. Link is in the description. Also, there is an important update for Smart Trader tier members. If you are a Smart Trader tier subscriber, for each month you are rewarded with a smart coin. You can use one smart coin for a 5 USD discount, so if you've been a Smart Trader tier member for at least 5 months, you can get the whole research data plus the 11 scripts for free. For more information, contact me on Discord or on Patreon. And now, what you've all been waiting for, let's see the final results. Here you can see the absolute top 3 results. These results are based on the profit factor, the top 3 results of all backtesting results, and the minimum trade count was set to 100. As you can see, there's a clear winner, the moving average. But as I mentioned earlier, there's a reason for that. The moving average based stop loss partially got disqualified, because using a moving average as a stop loss is not just a stop loss indicator, it is also a trend filter indicator. The best result was generated on the US 30 4-hour chart, longs only, and it generated a 2.4 profit factor. Moving on, here are the results for the best stop-loss indicators overall. In the first column, I listed all the stop-loss indicators. In the second one, the base points, then the weighted points, then the normalized points, and the average rank. The normalized points is just the average of the base points and the weighted points. And the average rank takes into consideration both the base points and the weighted points, and take the averages of each indicator's rank in those two groups. According to the base points and the weighted points, the clear winner is the moving average base stop loss. But as I mentioned before, that got partially disqualified. The same is the case with the Bollinger Bands. So in my opinion, the first 2 places should not go to the moving average, neither to the Bollinger Bands. Instead, in my opinion, the real winner is the ticks/pips based stop loss. This stop loss method earned 359 base points and 614 weighted points, and got the average rank of 3. That is closely followed by my personal favorite stop loss indicator, the ATR, with slightly less base points and with 478 weighted points. Then we have the percentage adaptive, then the pivot, and down at the bottom we got the swing low high and the Donchian. So in my opinion, using the ticks/pips based stop loss or the ATR based stop loss is the best decision. Then comes the percentage and the pivot, and the worst stop loss methods are the swing low high and the Donchian. Let me know in the comments what you think of this. And finally, let's see some bonus results. Which were the best stop loss indicators for different assets and timeframes? These results are based on the profit factor values of the top 20 results. For trading BTC USDT only, the adaptive percentage base proved itself to be the most reliable. For Euro USD, Microsoft and US 30, the moving average was the best. Talking about timeframes, for the 15-minute chart, the Bollinger Bands became the best performing stop loss. On the 4-hour, the moving average based, and on the daily, the moving average based too. Well, let me know which other stop loss indicators should I test for either a fixed stop loss or as a trading stop loss in the comment section below. And that wraps up today's video. If you found this video valuable, please drop a like, subscribe and turn on the notification bell. It really helps the channel. If you are interested in learning which entry signal, exit signal or baseline indicators are the best, check out the previous videos of this series here. As always, thank you all for watching, have an amazing day, and until next time, trade smart.